Good morning, everybody. Yeah, we will try to explore the world of market making today. So, we will try the art of ensuring liquidity and stability, all while trying not to check your portfolio in every 5 minutes. So, uh, thank you for joining us today. So, I would like to start. Please give a brief intro about yourself. How did you start it? What was the thought process behind to start Bellar and Pro, both of you? Yeah, thank you.
Thanks.
Yeah, G.
So, Valor is a global cryptocurrency exchange. We're backed by Pantera, Coinbase Ventures, and a few other notable investors in the crypto space. We're headquartered in Africa, actually. So it's interesting, the previous conversation that was had, because we actually serve a lot of the remittance demand that comes through the African market. Yeah, that's a brief introduction to Valor.
Yeah. Thanks.
So my name is Arsenii. I'm from Market Making Pro. So Market Making Pro is a company. It's related to market making, obviously. So we start our work in 2017. So we're doing market making now for more than 80 exchanges centralized. We are doing on dexes. So basically, we are providing full scope of market making services for many clients as we can do.
Yeah, most of our client also using Pro. Yeah. So I marked few lines from them. They say there are two ways to become a great market maker. One is to learn from your mistakes. Second is we are still figuring out here today. You have to be very, very excited how you can become a market maker, how you can utilize the market making strategies for your token, and how you can list your token on Velar, one of the leading exchange globally. So I'm going to ask first question is how has the recent market volatility affected your strategy as a market maker? Well, yeah. Arsenii, you can take.
So regarding liquidity and market making is a really crucial thing because when token go into exchange, it's really crucial and important to have enough liquidity for tokens. So basically what we can provide from our side, we can provide liquidity solutions, liquidity help. There are many different ways to provide liquidity for token, depends on which exchange they are listed and how many user flow, so how big is user community and etc. So basically for each token it's truly unique situation. So we analyze it and we are providing different solution. So liquidity is really important part because if you don't have enough liquidity, your token will go back and forth from high to low. Yeah.
And there might be slippage issue actually. Yeah, there is great slippage on I think 5-10% sometimes on Uniswap. We figured out if they are not using any liquidity provider. Yeah,
that's right.
Yeah. So G, I would like to ask you what tools indicators do you find most useful as you are running an exchange for market making?
Yeah, so maybe the perspective of an exchange is a little bit different. We're on the receiving side right, of services by market makers, and we set up our order books and the markets that we support to have good liquidity.
Okay.
Liquidity is one of the main concerns for an exchange. It's one of the most important problems that we need to solve. Without good liquidity, you can't offer healthy markets. It's at the center of being able to offer markets that can trade well, right? Yeah. And on Valor, we offer spot trading, leverage trading on spot, as well as perpetual futures. So when you add leverage to an exchange, the ability to exit positions and liquidate accounts it happens on exchange frequently, right? So in order to support that, you need deep liquidity that you can depend on. Yeah. So with respect to the tools that an exchange uses specifically, from our perspective, I think, look, it's really challenging to know where the market is going, right? If we could all predict price movements, then I don't think we'd be in a position to have to run these businesses. But what we work really hard on doing is having fast feedback on when markets are not in a good state. If liquidity is disappearing or is not performing to KPIs that we set with market makers that work with Valor, then we're in touch with those market makers immediately to improve that situation. I think that's a key
as you are running also exchange, so do you also provide some board mechanism? I feel here are many founders who are looking to list on your exchanges. So my two questions from you directly. One is like, are you also providing some board for liquidity management as a exchange? Second is, what's the listing criteria on Valor actually?
Yeah, so Valor itself doesn't perform any sort of market making on our own exchange. We work with external parties to do that. But we welcome all token projects to come and speak to us. We have a listing criteria that we can discuss with token projects. We're very interested in inviting more projects onto Valor. And we have a number of market makers that we work with who we can introduce token projects to if they need support in that regard. It might not be obvious to everybody here, but when you list a new token, liquidity doesn't just appear out of thin air, right? It's something that needs to be stimulated initially. And so token projects work with designated market makers to ensure that they have liquidity when they launch and are listed on exchanges.
Yeah, nice, thank you. So Arsenii, I would like to ask you the question, how do token projects ensure liquidity when their tokens are listed on exchanges?
So regarding, you mean our exchange?
Yeah. Using Pro, yeah, like how they can ensure the token liquidity on the DEXs?
So on the DEXs, right?
Yeah.
So on the DEXs, there is a different situation. To provide liquidity, usually, first of all, owners of the token provide liquidity, their own liquidity. They're just liquidity. After that, we recommend to all token owners to do something like staking of liquidity or mining of liquidity. So basically, owner of the token could provide some profit for liquidity owners of his own users. So basically, in this way, token could get really much more liquidity basically for free. Because if they're providing liquidity, that means price manipulations and price going up and down, it could go really less often. So basically, based on that, it could be really good for a project when they have really good liquidity on DEXs. Other things, of course, for liquidity mining is quite complicated regarding technical part because it could be stolen, but anyway, on any cases, we are providing full and comprehensive support.
So one more question I would also add, like there are some scenario where our project getting hacked nowadays, right? In that case, what kind of steps you take actually? Maybe there is a project actively trading on exchanges, maybe centralized exchange, maybe decentralized exchanges. So what measures you take when like the project getting hacked in middle?
So you see, it really depends on the project. So if projects is in the same time published and listed on the centralized and centralized exchanges, we are trying to control liquidity on both ways because it's really important. If price difference will be huge, you will get some problems because people will buy token for less price and sell for higher price. So basically, this is arbitrage. So, and we are, as market makers, controlling arbitrage. So basically, usually, first of all, we are earning money for our clients because we are trying to buy less and sell higher. And second of all, we are controlling price to make sure that CoinGecko or CoinMarketCap positions will be good.
Oh, nice, great, yeah. So, G, I would like to ask you, like, what kind of risk management practice do you employ to safeguard against in the volatile market?
Yeah, maybe the first thing I'll say is that volatile markets are both the time when you need liquidity the most and when it's most scarce, right? When the markets are moving quickly, that's when market makers tend to move their bids and offers to a wider range, and that doesn't allow for the kind of trading that is most needed at the time when markets are volatile. So something I mentioned earlier is still true in this regard. With respect to risk management from our perspective, we need to be like on top of our market makers to ensure that they're still providing depth and tight liquidity when markets are volatile. We also employ a number of measures to ensure that risks on our exchange are managed well in volatile markets. Things like the amount of debt that accounts can get into is limited. The size of positions are also restricted in cases where markets are extremely volatile. and there's complicated algorithms behind ensuring that futures markets are operating well, and people aren't getting out over their skis and trading way too aggressively when markets are very volatile.
Yeah, actually there are also, why I ask, because there are also other exchanges, like I can't I can't say the name here, but like recently Bitcoin touched $8,000. You can see like recently. So it's happening a lot because when market is volatile, maybe like if they are taking leverage, they might be liquidate.
Yeah.
So that's quite, and exchange is not responding at all after that. So how your exchange is different from others, like in the volatile conditions?
Yeah, I mean, like using that as an example,
Yeah.
Vala's got price bands, in fact. So
Okay.
specifically on futures markets, you can't trade further than 5% away from a fair price, which we compute. We calculate an index, which is the market price across a number of exchanges, and that is the fair market price for Bitcoin, right? So it doesn't make sense that you should be able to trade at $8,000 per Bitcoin today, right? No market other than that single market actually went to that price. So we ensure that if people are attempting to trade far away from a fair market price, they're not able to do so within reason, right? Yeah.
So are you guys aggregating the order book? Yeah, you are also taking from others like Coinbase and Binance.
So we operate our own order books for the majority of our significant trading pairs, meaning that you're trading on Vala. Like it's a pool of liquidity where there are market makers and market participants that are trading.
So what are the top 3 features if any user, your founder, come to your exchange?
This is turning into a pitch for Vala.
Yeah.
I mean,
I am quite excited because there is only few options left. So yeah, there is also a lot of trust issue. You can see like in the last year, like you can see with the FUD with Binance, you can after FTX Luna incident, yeah, there is a lot of FUD. Like even personally, I can't trust on any new exchanges. So that's why I am asking. That's an important question. Yeah.
Yeah, absolutely.
Yeah, it's not like I'm not asking to pitch, but it's important. Like as I am also a user, I might be also a user on your exchange actually.
I'll describe 2 features and maybe 1 principle.
Yeah, how you ensure trust basically on your exchanges? Like maybe most of the centralized exchange taking custody of user funds, right?
Yeah.
So how you ensure, how you are like ensure the regulatory environment as well? Yeah.
Yeah. So Vala is a regulated exchange. Okay. We have licenses in Europe, procuring the license in Dubai through Vara as well. And have licenses in South Africa and also procuring a license in Mauritius, in fact. So as a licensed exchange, there's standards that we need to operate to, which are important and build trust in time, I think. For a centralized exchange, it's a difficult problem, right? Requiring, and custody is at the center of where concerns lie. Yeah. Right? For many for some exchanges, they're taking full custody of your funds, and you're not sure how that money is being used, right? Whether it's just being held in full reserve or whether there's something else happening behind the scenes.
So you are also publishing your reserve on CoinMarketCap, right?
So we are listed on CoinMarketCap. Today we don't conduct proof of reserves, not at the present moment, but we're working towards a better model of proving reserves to customers. The interesting thing is the proof of reserves that you see on CoinMarketCap currently is not actually telling you anything of factual certainty, right? They can tell you that they have the balances in place for you as a single user. It doesn't tell you that the assets in full that the exchange holds matches the liabilities that they owe their customers. That today doesn't exist, actually. So we actually need a better solution for that in the crypto space.
Great.
But from Vala's perspective, all funds are fully collateralized. There is no movement of balances that belong to customers. They're all completely, fully reserved and backed on Vala.
Okay, thank you. So Arsenii, I would like to ask one more question from you. What emerging trends do you see shaping the future of market making?
So regarding trends in future, we see really huge impact of AI, of course.
One more thing, I would like to add, there is also another AM like Maverick, you see, like there is mode left, mode right. You can manage your liquidity and all, right? So how do you see them, right, actually? also like as an emerging trend and also other trend as you mentioned AI. Sorry to interrupt you, please.
Yeah, you see, so AI really could help us to do some tedious tasks which we're doing like manually for now. So trends is really important. Really important. AI really could help us to manage, first of all, liquidity properly. Second of all, it could really manage and help us to operate with huge amount of data, of course. So this is the huge trend for now. So basically, AI will never, replace real humans on some planning of work. So we will never replace it to do some important and crucial work. But for some tedious work, it could really help us to manage order book, for example, manage trades, so to control trades, to control history of trades of the token. So basically, based on this huge amount of information, we can do some analysis and could really help our clients to maybe change strategy or maybe adjust strategy to some different amount of work.
Oh, nice, thank you. So, G, one question is coming for you directly. So, what are some of the unique challenges you face when dealing with the global market? As you started, like you were in the early phase, you were serving the African market actually. Now you are going globally. So, what's the challenges you are facing when you are going globally currently? You are the better person because you are now like currently expanding in the global market.
Yeah.
And what's the top country you are targeting, like where you should expand first, like, yeah.
Yeah, it's no mistake that we're here in Asia. We believe that the APAC region is a really significant area of growth for exchanges generally and specifically for Vala as well. If you look globally, a lot of like the understanding of crypto markets and a lot of trade activity is based in Asia, we believe. So this is a market of great interest for us. It's a market that we're aggressively moving into and have hired many team members from. And I think the key areas of concern, and it's not different for us as it is for other exchanges, is regulations are changing rapidly. There's definitely a much larger focus today on being a compliant and regulated exchange than ever before in history. We welcome that because we think that it sets the industry up for a much healthier state in the future, and we've been kind of proactively self-regulating since the very beginning. So that's really important. The second factor is just getting people to try our product, actually. We believe we've got a product that stands up against the likes of Bybit and Binance and others. It's a big statement to make. The proof is in real customers actually making use of these products and deciding for themselves, right? So a big endeavor for us this year is to ensure that we're properly incentivizing customers to come, trade on Vala, experience our products, and decide for themselves whether they want to trade on Vala. And it's an endeavor that we're putting a significant amount of effort and capital into, in fact. Just for the purpose of market making, we're intending to share up to $60 million this year in incentives to market makers who are supporting our markets. So it's a challenge to get attention, right, in this space, because there are so many exchanges and so many different players. Only a few are really doing things well, I think, and really thinking carefully about serving customers in a safe and good manner. So hopefully we are one of those, and we'll see.
Thanks, great. So one last question, guys. What is one piece of advice you would give to someone in entering the market making industry? Yeah, the question is from both of you. Yeah, like what's the piece of advice who wants to enter in the market making industry? Yeah, like I feel there are newcomers also who wants to, like maybe sometimes founders wants to manage the liquidity themselves, right? Sometimes they are hiring the other partners. So, and maybe there are like both kind of scenario. Maybe new market makers wants to join. Maybe founders manage the liquidity itself on DEXs actually.
So regarding piece of advice, so I would recommend for token owners to choose reliable partner regarding market maker, because In market making, it's so easy to get really fast money as market maker. So you can go with your new token really high and they'll sell it and go really low. So basically, a lot of partners, of course, I will not gonna tell their names, they're doing this thing. This is so unfair to token owners because basically, after this type of market making, your token will never survive properly.
Yeah.
So that's the truth. So you just guys need to check, you do your due diligence, you check by your own regarding partners. We are, for our company, we are just doing market making without huge amount for profits for us. Because we are holding, we own another companies, we are own bank, we are own trust. So basically make sure you will find partner in market making who is doing his job really, in peaceful way.
Yeah, same.
Yeah.
Yeah.
I think for anyone entering the crypto space, whether as a founder or just interested in crypto or wanting to learn more, honestly, the best piece of advice I can give you is go and use products, right? You learn so much from actually engaging with the products that exist in the crypto space, and it teaches you where the gaps are, in fact. If you're an active trader and trading on a number of exchanges, you can kind of tell the experience that you enjoy and what is lacking, specifically with related to liquidity, right, in certain circumstances. And I think that's the best thing you can do. Just go and use products, play around. That teaches you the most.
Yeah, one last question. Also, as a market maker, as a exchange, what are the emerging trends in the current market for in Web3, actually Web3 blockchain, yeah, crypto, you can say, yeah. For both of you, yeah.
Meme coins. I mean, currently, obviously the market is hot. Prices are rising. People are feeling good again, it seems. I would say there's a significant focus right now in crypto on throughput and on blockchains that actually support significant load, right? We're back to having the argument of whether a layer 1 blockchain can sustain itself and support a huge number of transactions per second, or whether we need scaling solutions like layer 2s. And that argument is heating up, and there's many different paths that are being taken. And honestly, currently, alternative layer 1's actually winning this argument, at least in the popular opinion, right, of people who are trading these markets. Where that lands, I'm not sure, but that is a very interesting and long-standing problem that the crypto industry is trying to deal with. How do we scale blockchains so that they can support decentralized exchanges that might have central limit order books in the future? These things are important problems to be solved. So that's the true trend, and then there's a whole lot of degens that are trading meme coins at the moment and having a lot of fun.
Yeah, and one more question, related question. So what do you think about DEXs? Do you see DEXs, what's the competition in between DEXs versus central exchanges? Because there is a lot of exchanges like DYDEX who are matching the latency and speed as these centralized exchanges. That's why I asked.
Yeah. As a somewhat a degen myself and a crypto person at heart, I think it would be amazing to see decentralized exchanges gain a real foothold. They have been gaining traction. They have been growing faster than centralized exchanges. And I think that's an important trend, right? If you're able in the future to take self-custody and trade on an exchange with a user experience that matches a centralized exchange, that's going to be a really compelling product, right? Today, I don't think that fully exists. So it's a trend we're watching very closely and working towards, in fact. So we keep in mind the fact that separation of custody from exchange is something that may very well just be a requirement in the future.
Thank you. Yeah, Arsenii, what are the emerging trends? Yeah,
DEXs are a really important part of each blockchain regarding blockchain development, blockchain infrastructure, because a pressure that DEXs made on blockchain itself, it's really huge amount of pressure of infrastructure and everything. So basically, it really depends how many DEXs you have on your own exchange. So more DEXs means faster your exchange will expand and will really improve itself regarding infrastructure side.
Yeah, thank you. Yeah, and now, do you have any question in audience? I think no one. So thanks Thanks everybody to joining us today. So we are going to close this session today. Thank you. Bye-bye. Have a
Thank
nice
you
day.
so much.
Thank you.